Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about ADF Foods, one of the stocks in the consumption basket but in the small cap domain, and let's see what you need to do in this stock. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Now about ADF Foods, this was established in 1932, so a pretty old company, around 80 years old, 85 years old company, has operations in India and abroad, exports to virtually all across the world. So they produce some masalas and some of the eatery things that are packed foods, and they export it to around the world except in South America. Has eight major brands. Ashoka is one of the brands. So Ashoka Food Products is one of the most prominent brand of ADF Foods. They make pickles, chutneys, sauces, and pastes. Mainly, they make masalas or masala paste for people abroad to have food similar to the kind they would have in India. So, Indian living abroad NRIs would love to have these masalas or packed masalas for themselves in order to cook food at home, and it is quite prominent in US as well. uh, they also sell ready to eat food, which they had started about 4 5 years back, and they're doing well in that as well. About the numbers for FY19, the sales were up around 15%, as you can see, even in difficult terrain or difficult circumstances. And look at the PAT growth of around 40%, and they had a similar PAT growth, or even better, around 60% PAT growth in FY18, so compared to FY17. And I put up that video as well about a year back. You can have a look at that video as well of ADF Foods. The EPS has grown to around 12 rupees from 8.5, and the return on equity is around 7%, whereas the margins have also expanded. So now the margins are not in single digit but just over 10%, the net profit margin. There's no debt on the company, so it is completely debt free. So about the valuation, it trades at under 20 times current earnings. There is high institutional holding in the stock. So these are all the other numbers that you would look at in a company. So very high institutional holding, around you would say around 40%, 35 to 40% institutional holding in this company. 8 decades old experience. As I said, it's around 85 87 years old company, so it's not that it is newly established and you would have some doubt on the promoters. They have done exceedingly well over the last 7 8 decades. It is a pure FMCG firm and a big play on global and urban consumption. So even in India, urban consumption in families where both parents are working, or in nuclear families, these kind of products really work good, as we have seen with Tasty Bites, Jubilant Food Works. I have a feeling that this is a unique kind of business that Ashoka is in, or ADF Foods is in, and probably over the next 5 to 7 years it would do well. The problem areas for the company is for sure the low promoter holding. So when I checked on different websites, the promoter holding came out to be around 33%, which is relatively low compared to how it is in other FMCG firms, where the promoter holding is between 50 to 80%, even more. So that is a cause for concern. There has been a flat growth since 2013, you could say 12 13 till 17. Not quite growth, but I would say that over the last 2 years the growth has been phenomenal. Sales growth has not been a lot, but the profitability has increased, which means that two things has happened, that the expenses has declined. So raw material cost or other expenses has been reduced, plus the operational efficiency has increased, which is quite good for any company. It is in a very competitive market for sure. There are multiple brands, at least a dozen brands in the market of ready to eat food or masalas, etc., which could give stiff competition to ADF Foods. But I feel that as the company has withstood the pain, withstood the competition over the last 7 8 decades, has and have increased margins and profitability, this company would do well over the next half a decade. Raw material cost has appreciated over the last 1.5 years, and that could also hamper numbers going forward. And because the company exports its products majorly to Europe and US, the Brexit, other political issues, economic issues, trade barriers, etc., may hamper their businesses abroad, and that could also derail the profit train that the company has been running on over the last 7 8 quarters. So, what needs to be done? I would say that you have to buy as an SIP and should only be max 5% of your portfolio. I think it is in a very good space, and the company is showing good growth over the last couple of years. So, over the last 5 6 quarters, it has done appreciably well. At around 300 rupees, it is slightly gone up from those 230 240 levels it used to be, but this is because of the numbers and the fact that they have got the tax benefit as well. So one needs to take that into account, and hence you could buy incrementally over the next 12 15 months in this stock, and keep track of global and corporate development. So in any small cap stock which exports abroad, or which has business exposure more than 30% from outside India, you have to keep track of global events, of what is happening politically, economically, as well as what is happening in the corporates, because it is a small cap. So any change in management should be a trigger for you to either buy more or sell. Numbers should pick up even further going forward, because the Indian economy would expand from here. The Indian economy is in doldrums at the moment, and still the company is doing pretty well. Similar situation is in Britain because of the Brexit. So look for this company, or you can look for other FMCG companies on decline. So not at the moment, but if they decline a lot, then of course companies like HUL, Page Industries, Dabur, etc., Britannia would be a preferred buy on ADF Foods because of their pedigree. Uh, but in order to make a lot of money, in order to make say 24 25% yearly, you have to look for good mid cap, small caps, and ADF Foods falls into it until the management does something dopey, which could happen. I won't say that it's not out of the question, but at the moment it looks quite sturdy on the management front as well. So this was my video on ADF Foods. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. This week I'm going to put up a video on question and answer session as well in 2 or 3 days time. So kindly put in your queries on stocks and sectors and the market. Thanks a lot for watching.